Hey guys, it's November. Time for another episode of Big Trends Monthly. I'm Josh Brown. I'm here with my pal JC Parets of All Star Charts. We're breaking down the biggest monthly closing candlestick charts and more to reveal the most meaningful market moves around the world. Quick heads up on candlestick charting. It originated in the 1700s as speculators in the rice markets of feudal Japan saw the advantage of visualizing the four most important price points of each day: the open, the close, the high, and the low. As each month comes to an end, every investable asset class produces a new candle on its monthly chart. These are the most notable ones according to JC Parets and the stories behind them. JC, what's happening?
You know, you want me to bring the dopest charts. It's really hard to narrow it down to only 5 or 6, but let me see if we could just start with something that I think is being ignored. And I think it's the rotation, right? Everybody's like, oh, tech and discretionary and US and that. You know, I'm seeing China breaking out to all-time highs. This first chart is China technology and China internet, both breaking out to all-time highs. These are the highest monthly closing prices ever for these indexes. They say blame China, blame China. I say buy China.
Okay, these are just pure price. These aren't ratio charts.
Nope.
So, okay, would you call these cup and handles, or you don't like that term?
You know, I'm not into like the teacup naming of like price pattern. Like, I don't really know what that's all about, to be honest. You know, for me, I see consolidations and breakouts. You know, new uptrends, consolidations, breakout. In my experience, new uptrend comes next. So, and here's the other thing. It's like, all right, JC, China's making all-time highs, but what about the Fed and the Trump and all this, you know, all the Chinese, you know, Spanish debt yields or whatever, you know, whatever gloom and doom story you have, that story is just wrong if these China indexes are above their 2018 highs. And 2 months ago, you and I did this, and we were pointing to the A shares breaking out to all-time highs. Now we're looking at individual sector indexes breaking out to all-time highs. Your gloom and doom end of the world scenario is purely wrong. It's wrong if these China indexes are above those 18 highs.
What's in these? I know what's in K-Web. It's like all the internet giant Chinese companies like JD.com and Ctrip and Sina and Baidu. I know that. What's in China technology?
Well, you're not going to get the Baba, right? But you're still going to get the Tencent, Baidu, NetEase. Right. You're still going to get, it looks very similar. The big difference is the Baba.
Yeah. Okay, got it. And then Ant Financial is going to go public, I think, this month. I think it's going to be the biggest IPO in history in terms of like how much they raise out of the gates and how much the company is worth out of the gates. So that's pretty exciting, and maybe that drives even more interest toward these stocks.
Yeah, and I want to just continue to stress emerging markets, right? So the largest three components of EEM are Tencent, Baba, right? I mean, these are Taiwan Semi, Sony. These are the biggest components of emerging markets. They're not natural resources.
Right. I think people have to relearn what's actually in the EM. All right, let's go to EM versus S&P 500. This is interesting because it's been a while since we could say that EM looked good absolutely or relative to U.S. large cap stocks. Is that starting to change? Is that what you're seeing here?
I mean, listen, we've been watching this since the summer because the ratio of emerging markets relative to the S&P 500 is down to those 03 lows. So we're coming into in this summer and we're looking at this and not really trying to bottom fish, but just be aware that this is important historic support. So if emerging markets were ever in their freaking lives going to start to outperform, this would be a perfectly logical place for that to happen. And as it turns out, that's exactly what we're seeing. We're seeing new multi-month highs on a relative basis in emerging markets. And then let me just focus in that green box. What we've seen since the spring is frontier markets breaking out on a relative basis. You know what those are?
What, frontier markets?
Yeah.
It's countries that have like 3 stocks that trade.
They're too illiquid, they're too small, they're too risky to even be considered emerging markets, right? So they're like pre-emerging markets, things like, classic safe havens like Kazakhstan and Kuwait and Bangladesh and Sri Lanka,
Right.
where money goes to hide during, risk off scenarios, right? No, like if they're buying this crap, the Bank of Kazakhstan, like they're buying this at a more aggressive rate than they're buying US stocks. To me, that's got to be evidence of risk appetite, Josh, not risk averse.
The dollar figures are much smaller though. I had a client who was in the silver mining business, and he took a trip to Mongolia, and he told me he visited the stock exchange in whatever the capital city of Mongolia is. I forget the name. He said it's open like 3 hours a day, and then the rest of the day it's like a slaughterhouse. Like literally, they're butchering and selling chickens in the same building. I don't know if that's still true. This is like 15 years ago. All right, where are we? I don't know what to do after that. Where are we going next? So you're showing me
my
yields.
point is, I think it's not just China, but even some of the riskier areas of the emerging market space are catching a bid. Like we discussed, there's different components in emerging markets than there were. I think that's just an interesting theme we need to be aware of.
Okay, let's do this yield chart because this, I think this is something that we've been following pretty much each month, and it's like similar to the EM versus SPY. It really does look like it wants to bottom here.
Well, a few months back, we talked about how regional banks were making new all-time lows on a relative basis, and the US 10-year yield put in an outside month. And I was like, I don't see rates going up and regional banks continuing to make new lows. So what's going on now? So we have three lines plotted here. At the top, we have the US 10-year yield, which is the benchmark for interest rates. In the middle, we have the copper gold ratio. And at the bottom, we have regional banks versus REITs. As you can imagine, all three of these look pretty much exactly the same. When they diverge with one another, that's the signal. So like, for example, at the end of 2018, when the US 10-year yield got above 3%, as you can see in this chart, copper gold ratio was calling bullshit. Regional banks versus REITs were calling bullshit. That was part of the reason why we were so bullish of bonds, because commodities and stocks were calling fugazi on the yield breakout above 3%, right?
It took the bond market participants a little bit of time to catch up to the fact that we were having a trade war induced slowdown, like no matter what, and the metals markets and the stock market got it right first. That's what you're saying?
Definitely.
Okay.
Which goes back to, when they say the bond market's always right. In this case, the bond market was the one that was wrong.
That's right.
So it's not just like which one's right and which one's wrong, but it's about all of them sort of cooperating with one another. The copper gold ratio has been putting in higher lows while the US 10-year yield made new lows, and regional banks, as we pointed out 2 months ago, made new relative lows. So now the fact that they're back above that key support, copper gold ratio seems to be the leading indicator here.
Okay, so the idea behind following something like copper gold is that more demand for copper would result in higher prices, and you would have more demand because there's more economic activity. And then when gold is leading copper, it's the other way around. It's people that would prefer to go to a safe haven rather than invest in economic growth. Okay, conceptually, I get that. What's the story behind regional banks versus REITs? Is that just straight up growth versus yield? Is that the way you see it?
Your copper gold, theory is probably right. I can't really speak to that. In the case of regional banks and REITs, my fundamental colleagues tell me that regional banks, their margins increase as interest rates go up. That may or may not be true. REITs, as rates are falling, if the market thinks rates are going to be falling, then fixed income investors are not able to get their yield in the bond market. So you're going to get a sympathy bid in higher dividend paying stocks in the stock market, right? So where the market, so you're going to get that sympathy bid in things like REITs that pay a high dividend. So the ratio between regional banks and REITs looks identical to the US 10-year yield.
Bro, REITs have been so good over the last 10 years. Regional banks have gone nowhere. This is almost like Jets priced in Patriots. This index.
It's actually pretty hilarious.
Okay, show me this. Talk to me about this gold futures chart, because this one looks exciting.
One of the things about monthly charts, Josh, is that it not only helps us zoom out and identify the primary trend, it forces us it makes it really hard to ignore the primary trend. So what do we have here in the late 90s, early 2000s? We had a monster base, we had a classic breakout, and a new secular uptrend. I mean, I don't care who you are, you're not going to argue that that's what happened, right? And then like anything else, we had an epic rally, and those gains need to digest. I mean, nothing goes straight up forever. So how about a decade of nothing for gold? Right. So I think 2000 is that level. If we're below 2000, I think the argument is we're still in this massive consolidation. North of 2000, I think we can start to make that argument. Okay, this is 2002 or whatever, you know?
So all right. So gold broke out this year, earlier this year, made a new nominal high. I think a new inflation adjusted high too. I could be wrong, but it broke out and then didn't fall. So it's been I don't know if this is a technical term, but gold has been, I know you guys like consolidating. I like that it's been hanging out near highs and like almost like waiting for the next leg. And so I can definitely imagine a lot of people seeing this breakout coinciding with the chaotic aftermath of the election that we're going to have this week and being like, see, I told you gold is a good hedge against societal breakdown. But this is a long time coming is the point.
Listen, all we know is that gold is just a hedge against making money. That's the only thing that it's proven over a long period of time, right?
Right.
What I want to reiterate, let's talk about what hanging out actually means, right?
Yeah.
What does hanging out mean? Hanging out is what is actually taking place as demand is absorbing overhead supply. I don't care who you are. You will agree with me that there is an overwhelming amount of supply relative to demand in gold around the 2000 level. That has been proven. It's not like JC's opinion.
No, That's where the sellers have shown up.
Right.
Okay.
So when we get through that, that's the market indicating to us that the demand has finally been able to absorb that supply after almost a decade, and now we can proceed to higher prices.
Okay. I don't see a silver chart here, but I'm assuming it looks similar.
It does, but it's lagging. So where gold hit its upside target earlier this year, which was those former lows in 2011, 2012 before it collapsed in 2013. So it struggled at those levels. Silver is at those levels now.
Okay. And then the miners don't look quite as good as the metal, but typically they're on a little bit of a lag.
They are also below overhead supply. I think they will break out simultaneously. Listen, when gold gets going, you'll know. Right. Trust me, you'll know.
Okay, so now related to gold, here's digital gold, or what they call digital gold. Here's Bitcoin. Yeah. It's amazing this has been now around long enough that we have monthly candlesticks, so there actually might be some meaning here. That's kind of cool.
Isn't it?
So this looks similar to gold, the consolidation in gold.
I think it looks similar to the consolidations we've seen over the past decade in its own, right? Don't those look like the other ones?
Yeah. It's just in a condensed time. It's in a condensed time frame. So Bitcoin topped out in around Christmas 2017. Once everybody that had heard about it ended up getting their fill, that was the end. And then in Chicago, they launched futures trading, so the pros could come in and basically wreck the one-way market, turn it into a two-way market. And the rest is history.
That's right.
But Bitcoin has become more popular again this year. Probably has a lot to do with the same reasons gold has, people just wanting something other than dollars. And then last week we saw an announcement from PayPal, which has 200 million users, is probably the largest consumer-facing money transfer mechanism around peer-to-peer around the world with Venmo. And PayPal is going to facilitate Bitcoin transactions in the app, which probably leads to a lot of discovery, which then leads to demand. So that's my fundamental story, but tell me what you're seeing on the charts.
Yeah, that sounds great. I mean, I buy it. That works for me. For me, I'm obviously more price oriented. It doesn't really matter to me why, but for me, I mean, in our pilot episode of the JB and JC show, right? We talked about Bitcoin, breaking out, holding 10,000, and the bet was, listen, if we're above 10,000, how do you not own it? Right? Below it, then leave it alone. But above it, because the risk versus reward was so well defined, 10,000 being that level. And then what's the upside? 20,000, 30,000, 100,000, make it 1 million. Doesn't matter. The point is that the risk reward is so skewed in favor of the bulls if that 10,000 level was your floor. And now where are we? 13 something?
Right. So in other words, don't even worry about what the upside target is. If it's in an uptrend, you're staying long. If it breaks that uptrend, you're out. Don't worry about what you think it's worth, because there's no way to actually determine that. It's worth what it's literally a commodity that has no use in the real world other than people using it to own it and sell it and short it and buy it. It's an investable commodity at this point. It may cross over and become useful for transactions, but until then, price is all that matters here. And there's no telling what the next buyer is willing to pay for it. But it won't have anything.
It's only closed the month higher one other time in history. And it was at December 2017. It's the only month ever that closed higher.
Oh, is that right? So this is a monthly closing new high?
No, second highest ever.
Second highest. What was the monthly close in December 17? 16,000, 17?
Slightly above. We came within pennies of making a new all-time monthly close.
Do you feel that as although Bitcoin is up this year, the volatility seems to not be as high as it was in prior years? Or am I just making that up?
You could just see it in the size of the individual candlesticks, right? They're smaller than they have been.
Which means a more condensed range of monthly high, monthly low.
Yeah.
Okay.
I mean, go back and look at the size of some of these candlesticks. Remember, this is a logarithmic chart, so you're going to get the actual percentage changes. I mean, go back. I mean, these are crazy moves.
All right. So what are we looking at here? These are the Young Aristocrats. I like it.
Yeah, I figured you would. This is right up your alley. So I'm talking to Straz. I was like, oh, I'm doing the video with Josh on Monday. Let's get the Aristocrats list out so I can show it off. This is really something really cool. You know, we do all this top-down work that you're well aware of, and then we have a series of universes that are more bottoms-up, right? So that it really makes it really hard for us to miss anything. It's really the goal behind this. We have the 2 to 100 club under the hood, like we've discussed. These are stocks.
Describe bottom-up versus top-down from a technical perspective for the viewers. What do you mean by that?
Well, the first thing that we're going to do, like if you ask me about Apple or Microsoft or Intel, like the first thing I'm going to do is tell you about every stock market index in the world, from Malaysia, you know, all throughout Europe and Asia and Latin America. We're going to look through the entire world because we look at stocks as an asset class, not just, oh, what's going on in the US or Canada or India, right? As an asset class. Then we're going to do the same thing with every commodity future in the world, every currency cross, or most of them anyway, the interest rate markets across the curve for the biggest 30 countries in the world, right? So we're going to do all that work and analyze the intermarket relationships among all of them before we even get to the United States.
It sounds like I'm going to be waiting for my answer on Apple for a long time.
Well, that's the process, right? So by the time we decide we're going to buy Abbott Labs, 95% of the reason we're buying Abbott Labs has nothing to do with the chart of Abbott Labs. It's probably because we like stocks, we like US stocks, we like healthcare, we like medical equipment, we like large caps, and it just so happens that Abbott Labs gives us the best risk-reward opportunity to express that theme in the market, right? So that's the top-down work. So then we'll supplement that with different universes of stocks that give us the bottoms-up perspective, where it's like, these are stocks showing an unusual increase in investor interest. Another one are the names that are breaking out from small cap to mid cap status. That could be the next $100 billion companies. In this case, there are stocks that continue to raise their dividends every single year. So these are what we call the Young Aristocrats.
So the Young Aristocrats, how do you get membership? You raise your dividends each year?
So to be an official aristocrat, you have had to have raised your dividend every year for 25 years plus. So like J&J and Coca-Cola, they've done it for like 60 years.
There's a couple of ETFs of those.
Probably.
So the Young Aristocrats are what? Newer companies that have begun to raise their dividends.
So if an aristocrat is 25 years plus, our group of what they call challengers, we call them the Young Aristocrats because we're buying the stocks that we think could be the future aristocrats. These have raised their dividends every year for between 5 and 9 years.
Okay, I like it. I like it.
So the goal is to get paid to make money. So we'll get the list and then we'll overlay our technical analysis. So they're only on the list if they're making new highs, right? They have to be making new highs for them to be future aristocrats.
What's the threshold that they have to be in within a new all-time high? Like how much room do they have?
We have a series of thresholds that are long-term moving averages that they have to be above because, and then another thing I'd like to mention is we don't look for ones with giant dividends because those are stocks that probably gotten crushed, right? That's not what we're looking for. If you see a 1% to 2% dividend, don't get scared that that's not a lot, because the reason it's such a low yield is probably because the stock's done so well. Don't hold it against it.
Right, and a company with a lot of growth opportunity ahead of it is not focused on paying out as much as it can right now. It's reinvesting. What happens after a correction? Does this whole list of stocks get reshuffled? And all of a sudden you have a new group of stocks making highs? Or
a lot of our overlays are relative overlays. So we're looking for relative strength as well.
Relative to the market. Okay.
Right.
So you're allowing for the fact that you could have all these stocks in uptrends, then you could have a horrendous 2 or 3 week period where the whole market corrects, but you don't want to lose all these stocks. You want them to be able to hang in there if they stayed strong.
Well, look at the example that I'm bringing. Is
okay,
Dolby Labs.
Yep.
And this is probably near and dear to your heart. It's literally the speaker company.
Yep.
And it is a $7.5 billion company. And this is what I mean by relative strength. So look how last year we pushed up against those former highs in Dolby Labs and kind of have just traded sideways, right? Market had a severe correction, all those things, but we've been pressing up against these highs, just broke out. I think this has got $100 written all over it. And it pays a nice dividend. And they keep increasing their dividend.
Okay, so this is an example of this stock makes it onto your Young Aristocrats list quantitatively. It fits the bill in terms of the things that you're screening for. And then by hand, you take a look at this chart individually and you say, okay, not only does it make it to the Young Aristocrats, but like when I take a look at it with my own 2 eyes, I can see that this is the type of stock I like to be involved with.
That's exactly right, because this is an art, not just a science. We use the science to help supplement the art, but at the end of the day,
well, it's like a starting point. You know, I did a TikTok video last week. Don't laugh. I wasn't dancing, but I was just like, the difference, like one of the main differences between professional traders, and I know many, versus like retail, like what we derisively refer to as, one of the main differences is that retail doesn't know where to start. So they start their day like, flip on TV. Oh, what's everybody gossiping about? Oh, everyone's talking about Boeing? I guess I'm trading Boeing today. Whereas like a professional is like, these are the setups that I'm looking for. And I build my screens and I'm agnostic. Every day, every week, there might be new companies added to the list. And I don't have a bias because one is an oil stock and one is a software stock. It's just like, this is the setup that I trade. This is how I do risk management. Retail's like one of my friends talking about on Robinhood. Oh, I'll just trade that. And it's like, no. You can't let the world tell you. You have to tell the world, this is what but you know, it takes some time to figure it out. So the Young Aristocrats list for somebody that's looking to invest in trade and growth stocks sounds like a better starting point than, you know, whatever people are babbling about on Twitter or whatever.
I agree with everything you said, but I'll add on to that. And it's not just like these magical screens and magical setups, but it's about adapting to the environment and looking and building screens and setups according to the environment that we're in. Not like we're making all-time highs in the indexes. So the charts that I'm bringing, a lot of them are making all-time highs, right? But if this was March, we'd be having a much different conversation. Our screens would be very different, right? So it's not about forcing your process on the market. It's about letting the market tell you what it's doing, and then having a meeting with your team or with yourself and being like, okay, what are we looking for? What are we trying to do?
All right. So JC, tell everybody how they can access your latest stuff and your monthly candle book.
You can find me at allstarcharts.com. And what I'm going to do for everybody watching, you email candles@allstarcharts.com. I'm going to send you our latest Young Aristocrats report. So here's the list. We're showing it to you. Here's one idea, but we'll send you the full report so you can check that out. So candles@allstarcharts.com, and just put the code Young Aristocrats so the powers can be know what to send you.
All right. Special thanks to JC. We will be back first week of December for another all-new edition of Big Trends Monthly. Go visit allstarcharts.com. Send JC an email for the latest candlestick charts, the Young Aristocrats list, etc. Go ahead and smash that like button for me. It means a lot. Subscribe to this channel if you haven't already, and we will see you in a month.